same day, same catalyst. One stock ripped 21% in a single session, the other actually dropped 4%. Both are memory plays. Both got the same tailwind from Micron's earnings, and yet they went in completely opposite directions. Here's what makes it even stranger. The stock that surged 21% actually outpaced Micron itself. The satellite trade beat the mothership. Stick with us, and we'll break down exactly why the same news sent these two stocks in completely opposite directions. All right, June 25th, New York markets. 3 names to know today: SanDisk, Western Digital, and the company that set it all off, Micron. Let's get the bottom line on the table first. This isn't just a story about memory conditions improving. It's a case study in how the exact same catalyst hits different stocks in completely different ways. And it all starts with Micron. Micron reported on June 24th, and it wasn't just a beat, it was a blowout. Quarterly revenue came in around $41.4 billion, well past the $35.6 billion Wall Street was looking for. Adjusted earnings per share topped $25, clearing street estimates that were sitting in the $20 range. Revenue more than tripled year over year. But what really lit the fuse was the guidance. Micron called for $50 billion in revenue next quarter against a consensus sitting around $43 billion. The forward guidance hit harder than the current results. And that single number lifted the entire memory complex. In theory, the whole group should have moved together. SanDisk, Western Digital, Seagate, they're all cut from the same cloth. And they did all move. But here's the first clue. The magnitude was wildly different. SanDisk surged nearly 21% at its intraday peak. Western Digital, on the same day, on the same news, closed down about 4%. If this is clicking for you, hit subscribe and stay with us. We'll have the next signal ready for you first. Same family, one was popping champagne, the other was at a wake. That kind of divergence doesn't happen by accident. So why did SanDisk run so hard? It comes down to one word: purity. SanDisk is a pure play NAND name. Its business is almost entirely NAND memory. So when a signal comes in that the memory cycle is turning, it hits this stock harder and more directly than a name with a more diversified business mix. The morning setup helped too. Citi analyst Asha Merchant raised her price target on SanDisk from $2,025 to $2,500, keeping a buy rating on the stock. That note dropped at 6:20 a.m. Eastern, and by 8:15 a.m., a follow-up analysis tied Micron's results directly to a changed outlook for SanDisk. The bullish case was already stacked before the opening bell. If you're holding SanDisk, keep this in mind. Being a pure NAND play means it's more sensitive to the cycle, and that's a double-edged sword. When the cycle lifts, it rips harder. When it turns, it can fall faster too. At this point, it might feel like the story's wrapped up. SanDisk ran because it's a pure NAND play. Western Digital lagged because it isn't. Clean and simple. But that framing is wrong. Western Digital didn't lag, it fell. On the same day, with the same positive catalyst in the air, it closed in negative territory. A difference in NAND exposure doesn't explain that. If it were just less sensitive, it should have still inched higher. So why did it go the other way? The real reason is that Western Digital was dealing with 3 separate internal headwinds hitting all at once. The catalyst came from outside, but the drag came from within. First, share exchange overhang. A transaction in which Western Digital converted more than 1 million shares of SanDisk stock it held into its own shares, closed on June 22nd. That created near-term supply pressure, and as arbitrage hedges piled in, the stock got pushed lower. Second, dilution. Western Digital settled roughly $858.4 million worth of 2028 convertible notes by handing over cash plus approximately 21.3 million new shares. Third, a downgrade. Fox advisors cut Western Digital from outperform to equal weight. The reasoning is telling expectations for hard disk drive prices had run well ahead of the actual room to move higher. Valuation pressure compounded that. The stock had rallied sharply this year, pushing its forward PE to around 40x, and it was exposed to the memory profit taking that swept out of Asian markets starting June 23rd. And from a Korean market perspective, this isn't somebody else's problem. A signal that the NAND cycle is recovering sends the same wind toward our own domestic memory names. Watching how a pure play like SanDisk responds to the cycle sharpens the lens for reading Korean memory stocks too. When Micron says NAND supply is tight, that call echoes directly into our own market. Stay with us 30 more seconds. We're gonna pull all three names together into one clean answer. Let's go back to the questions we opened with. Same catalyst. Why did SanDisk explode while Western Digital dropped? And why did SanDisk outrun Micron, the company that actually reported? The answers converge right here. Micron's earnings were the common spark. All three names caught it. But that same spark hit a completely different kind of fuel in each stock. SanDisk, as a pure NAND play, burned the brightest. On top of that, Micron's 21% step up in next quarter revenue guidance made SanDisk's own guidance range of $7.75 billion to $8.25 billion look conservative by comparison. Layer Citi's price target hike on top of that, and you have your answer for why the satellite name beat the company that actually reported. It had more leverage to the trade. Western Digital caught the exact same spark, but three internal headwinds hit simultaneously: the share exchange overhang, the convertible note dilution, and the hard drive pricing downgrade. On that particular day, the drag from within outweighed the lift from outside. So this was never a story about memory being good or bad. It's about how the same news runs into a company's fundamentals and splits into completely opposite outcomes. That's today's answer. There are a few forward-looking checkpoints worth flagging. We'll lay those out in a moment. But first, one structural backdrop that gives this whole move a stronger foundation. Morgan Stanley's Joseph Moore called this a fundamental repricing. NAND supply is tight enough that he sees no near-term path to balance, and he expects average selling prices to keep climbing throughout 2026 and potentially into 2027. Here's the core logic. Previous NAND cycles were driven by PCs and mobile. This one is being driven by AI and cloud customers, and those buyers prioritize performance and securing supply over chasing the lowest price. That makes the cycle less price sensitive and less volatile than what we've seen before. Now, let's put both scenarios on the table with equal weight, no tilting. Scenario A, the bull case. If Micron's guidance and Morgan Stanley's thesis are right, NAND prices keep climbing, and pure play names capture the most upside. If SanDisk's own guidance turns out to be conservative, there's more room to run. Scenario B, the risk case. SanDisk just jumped 21% in a single session. That much expectation is already priced in. And being a pure NAND play cuts both ways. When it cracks, it can crack harder. Western Digital showed us exactly what happens when valuations stretch to 40x forward earnings. Even a modest negative development triggers a wave of profit taking. The memory selling that swept out of Asia on June 23rd can come back at any time. On the checkpoint front, frankly, based on the data we have here, we can't pin down the full macro calendar, things like next week's PCE or PMI readings. We're not going to manufacture numbers that aren't there. But for these three specific names, what to watch is clear: the direction of NAND pricing, and whether additional analyst commentary starts stacking up on the SanDisk side, or whether concerns around Western Digital start to build. Three names to watch coming out of this story. First, SanDisk, ticker SNDK, the purest NAND exposure in the group, most sensitive to the cycle. Citi's price target is now at $2,500. Second, Western Digital, ticker WDC, caught the same catalyst but got tripped up by internal headwinds. Worth tracking how fast the share exchange overhang and dilution pressure get absorbed. Third, Micron, ticker MU. This is where it all started. Whether it actually delivers on that $50 billion guidance next quarter sets the benchmark for the entire memory space. Think back to the opening image. Same day, one stock up 21%, the other down 4%. Now you can see exactly why. Same spark, different fundamentals, completely opposite results. Here's the one tool to take away from today. When names in the same sector react differently to the same news, the first question to ask is this stock a pure play on that theme? Or does it have other businesses mixed in? The higher the purity, the harder and more directly the news hits. Keep that one principle, and you'll start reading these sector divergences much faster. If this was useful, subscribe and hit the bell and drop a comment letting us know whether you're watching SanDisk or Western Digital right now. We'll be back with another deep dive into the stories moving markets. And one last thing, this is analysis and information only, not investment advice. All investment decisions and their consequences are yours to make.